kid now at age 11 is becoming a third generation forest steward. Is just really right over the hill here, but as the crow flies up Anderson Creek, outside Talent. So in 2020, look, great, it's working. We had the Alameda fire. We lost about 2,600 structures, mostly residential, some commercial. I founded a nonprofit with a long-term mission to support community solutions for long-term recovery, resilience, and preparedness in the face of natural disasters. But really, you know, almost more important than that is our vision statement, which is placing affected populations at the center of transformative action. And so what that means is we're a bottom-up group, right? We're a nonprofit. We start at the community level. We start at the conversational level. We try to move up now into sort of the policy level, working with you guys on things like Firewise, on things like home hardening, on things like assessing your house for risk, offering home hardening incentives, forming Firewise communities, mapping your risks and resources as a rural community so you can be self-sufficient in the case of wildfire, and then also bringing that up to the agencies that are in charge of legislation, policy, and programs in the state to advocate for what we're seeing on the ground. So in addition to being the executive director of Firebrand, I also sit on the State Insurance Advisory Committee, which is not what I thought I'd be doing on September 9th, 2020 when I was thinking about just bringing out my skid steer and starting to scrape lots and prototype rapid deployable housing. But it's where the action's actually happening. And another place where the action's happening is really here in the Applegate. You guys have multiple kind of concurrent things going on. You're you know, as Nate talked about, you're updating your community wildfire protection plan, which is really important work for both the present and the future. You're also, I know the other Tucker here is also working on the Community Resilience Project out in Williams. You've got multiple organizations working on fuels here, and then we are holding the kind of 0 to 100 feet in your structure part of the Applegate engagement. So we've got 2 to 4, I'm not very sure where we are in the Applegate, 2 to 4 Firewise communities in development. Some of them are closer than others to getting recognized. But all in all, with our merger with Jacksonville Firewise, we collectively manage 43 Firewise communities in Jackson County and also work up in Josephine. So we're really in touch with the residents, and I think that the Applegate Valley is just an incredible place to do this work because we have really engaged residents. You know, you guys are really aware of your risk, but also a lot of great partners to work out here. And I just want to give a shout out to Greater Applegate for putting this on. I've been coming for a number of years now. And I'm lucky enough to every year I do a little bit of a different talk, but today I'm going to make you all absolutely sick of wildfire and insurance and how they interact, because it's really complex, but I've tried to make it in a way that is familiar to people, understand why they're paying higher premiums, why some of the mitigations that you guys are doing may not be recognized as much as you'd like to see, and also sort of the gap between the work you're doing, the work these organizations and agencies are doing on the land, and that you're doing around your house, and your insurers may not be in lockstep in recognizing that stuff. So I did not relabel my presentation, but it's about insurance and also recognizing Firewise. So just hands in the air, whose insurance premiums have increased over the last 5 years? Well, whoever didn't raise their hand, you're lucky. I know you live in San Antonio. I don't know. That's not really a cat place. But so there's a number of issues that homeowners are facing, the residents are facing. One is just non-renewals. Straight up, we're not going to insure you anymore. So then there's it's kind of new standards, and that can come in the form of what it looks like to you is do this work in order to stay insured. We need you to, you know, we have a picture of your house that you didn't know someone took, and you need to clear this branch. And by the way, that branch may not be on your neighbor's yard. And then insurers just not wanting to write any new policies in an area. These are the kind of availability issues, right? The impact's really heaviest in fire-threatened areas, so it's something that we're all seeing here in Oregon, but especially in wildfire-prone places like the Applegate, as well as just, you know, having to try to find insurers willing to write policies in Oregon. I know I had to do a big long search when I've been a Firewise community for about 14, 15 years now, maybe less. But instantly, I got an insurance premium reduction through USAA and then 6 months later they just cancel our policy. So there's a lot of decisions that look crazy from the residential side, but once you start to understand the larger picture, start to make a bit more sense. So that's sort of the availability. And affordability, you know, we're all aware of this. Premiums are increasing an average of 25 to 30%, and we're seeing that in Oregon. We're seeing it higher in a lot of other states, and I'll show you a graphic that kind of puts this into context. And then it's really just, you know, it's all part of one thing. It's a national problem. There's hurricanes, right? There's flooding, there's wildfire, there's all these sort of climate-caused disasters that are kind of coming out all at once, and it's really changing the whole landscape for insurers about what they're, you know, whether they're even able to write policies, but also how much those policies now cost. I tried to, so I want to say this, it's a really complex place, and I did not think I would know as much and also as little about insurance the more I get into it, but I tried to actually use ChatGPT a little bit to kind of take all these different things I've said and learned about insurance and wrap them into one single graphic. And I'm going to come back to this later because you may not understand it yet, but hopefully one success metric for me is whether you understand it when I'm done. So there's a lot of different factors here, but you know, remember that right now insurance premiums are really a lagging indicator of the increased risk and volatility we're seeing throughout whole markets in our whole country, and in some cases the whole world. But it is really the shock absorber for that global capital and wildfire risk. So what we know is that our landscapes and our climate disasters are really changing. They're increasing in severity, and they're increasing in the numbers of communities that are lost to them. You know, we had Alameda, and there were 7 other fires that day in Oregon that wiped out a number of structures. Nowhere as severe as Jackson County, but you also have to think about Palisades and Eaton, which just is really just a game changer as far as not just the tragedy of it and how many lives and livelihoods and homes were lost that day, but also, if you think about global capital, the amount of risk that's now that these companies that underwrite that risk have to pay out. So you're seeing, this could also be in a graph form, but in the 1980s, you know, you had 33 big climate events. The average loss is about $22 billion a year. And now here we are, last one I have is for 2024, 19 billion. 19 billion, that's just in wildfire, I think, because 22 billion, that's last 5 years, average losses of $123 billion a year. So you can see that increase from the 80s, that was on average, and then now in the 2020s and in late teens, we're at 123. So that's at least a little bit more than 5-fold increase for losses paid out. And that really is starting to affect a lot of markets here. I know these lag a little bit, but they should come here soon. Where are we? It ain't working, Tucker. Oh, there we go. Hey, look at that. The biggest difference is really fast fires, right? And we're able to put out with our suppression capacity, and shout out to everyone who's working on the front lines there. About 97-98% of the fires that fire starts. But it's really those 2%, 3% of fires that get away from folks that are near community that cause the majority of the losses. So the fast fires, and most of the homes are lost in the first day or a few hours of when wildfires enter community, and it happens really, like I said, really fast. And I'll let you kind of absorb that a little bit, but you know, there's different sort of visuals for this. But most of these are not your traditional wildfires, as we've seen. What these are is wind-driven ember storms. These are not wildfires; these are wind events with fire in them, and it's a very different thing when that enters community. And it's also really different on how it moves from the landscape, from the forest into communities. It's no longer a wildland fire problem. I know a lot of firefighters talk about just the inability to deal when it enters a community, how it turns into structure and structure spread, and that's exponential. That's not just like a linear increase of loss. We're gonna be on a lag here, but that's okay. As I said, it's a global problem. It's not just a wildfire problem. It's not just an Oregon problem. There really is a lag here, but I can see it. What this next graphic is going to show, there we go, is almost like a pie crust around the edges, right? Places that are near the ocean, places that are experiencing hurricane events, places that are really susceptible to wildfire. And here's Jackson, Josephine County. We're not the highest, but we're in there. We're orange, but we're not the deep orange or the red, right? So you've seen a lot of the activity coming out in sort of insurance solutions and insurance, that it's a dire crisis happening coming out of California. We're lucky in Oregon that we get about, between 2 to 5 years here to watch California kind of fall on its face and how they have tried to fix things and failed, or tried to fix things and maybe there's a new solution that we can then adopt. In California, what you have is a highly regulated market, or at least more regulated than maybe is healthy for the insurers. Because in Oregon, what we've learned from California is we do not want to turn whether you get a policy or how much your policy costs into, or whether you get a policy, into a binary choice for insurers on, yes, I can underwrite risk in this whole area, or no, my overlords, and I'll tell you who those folks are in a bit, are not willing to let us write more risk. Also, we don't regulate how much premiums can change, and that may sound bad from the homeowner's perspective because we're all of a sudden paying a lot more than we were the year before. But what we learn is unless insurers are really able to write or to price the risk appropriately, they're not willing to continue writing policies. I should start doing this like 15 seconds before my next slide. I'm going to learn this. Maybe y'all can help me out. What is the next one there? I think the next one is a little bit about, kind of placing Oregon in context for how much insurance costs. Like I said, we're not the worst, but we're not the least. We're kind of like in this, the lower part of the middle there. Everyone work your magic. Do what he's doing there. Dang it, maybe it'll happen. Wow.
It doesn't like this one.
Oh, there we go. So, this is basically the sort of rate changes by top 10 insurers. You're talking about your farmers, you're talking about State Farm, you're talking about USAA, you're talking about your big carriers. And what we see is that, a small increase in 2020, and that's likely right before our big wildfire season hit. It's still not there?
Yeah. Maybe go back and forth. Oh, well, there it is. There it is.
Okay. Man, now it's getting weird that I can see it and y'all can't. Okay, I'm going to go ahead and change this right now because, I thought I could hit it and then what that shows basically is that you see a small increase in 2020. That's likely before our big wildfire season hit. And then this massive amount of losses, and then all of a sudden it started scaling, the premium started increasing over years to where we are now. So that's really sort of the problem. And I guess I'll just add here, because I don't have a slide on sort of the reinsurance market, but if you have, say, Farmers or State Farm, or maybe you have, my awesome insurer, who I'm not going to say the name because I hope they'll keep my policy, they're not actually the ones, when you have a larger amount of risk than they can pay out for, a large amount of destruction than they can cover. A lot of that money doesn't sit within a State Farm, or I want to pick a smaller one, but it often is bought essentially by the reinsurance market. These are global operators, right? And they're looking at things like, what is the likelihood of a tsunami in Bangladesh against the likelihood of a catastrophic loss on the West Coast. Those are the sort of the decision places they're working in. And those guys are the ones actually paying out for like an Eaton and a Palisades. And so the insurance carriers themselves only have so much ability to make decisions on where they're willing to write risks, because they have investors too. And those investors are big global players. So that's sort of the state of the thing. I'll come back to that graphic and it'll hopefully make more sense in a little bit. But this is sort of the crux of the problem, is that the things that you're doing around your home, on your parcel, on your tax law, on your property. I didn't press anything.
Maybe go back and forth.
There we go.
There.
Every time you touch your mouse, it
Yes,
comes up.
the mouse.
Yeah.
I'm going to stand back here until I have to do it. So I want to look at that first quote first, right? We're finding ourselves having to say no in some situations because we don't feel like we know enough to confirm that we're being compensated for the risks that we're taking. They're not confident. You look at these bold statements, right? They don't have much that can make us comfortable in underwriting risk in these wildfire-prone areas. And they don't, like I said, they don't have confidence. And so what they're going to do is they're going to be more conservative, right? They're going to write policies that they're pretty sure are going to be at greater value than what they have to pay, if that makes sense. So that's really sort of the problem, right? And I'll also just add one more layer here.
Try touching your mouse.
Touch my mouse.
No.
There we go. Wow, it worked. Okay. Shut up. There's a few things that we can control and things we can't control, right? There's existing factors. What are the environmental conditions? The topography, climatology, and weather. There's a surrounding field. What kind of forest is here? What kind of vegetation is on there? Is it more or less flammable? How dense is it? That kind of things. And what sort of homes exist in a place. Those are things that kind of like come already predetermined in most places right now. Then there is, and then what's the strength of the infrastructure down there at the bottom? But then the stuff that we can control are the sort of the parcel level mitigation actions, right? What are you each individually and collectively in your neighborhood doing to reduce risk on your land? Likewise, the fuels within the community. Are there ladder fuels in your property to your trees? What types of vegetation? What types of ornamentals? What types of juniper? And we hate on juniper so much, and that like for good reason. What sort of juniper did your aunt's ex-boyfriend plant on the property you live at right now 20 years ago that's now overgrown the side of your home and it really, is forming a dense fuel bed against your house? Are there fire and fuel breaks that are likely to break up the arrival of embers from maybe further away? Are there dead fuels in forest areas? Have they been mitigated? Also, what codes exist in areas? I know, we tend to resist these kinds of things, but voluntary compliance is great for those who voluntarily comply, and some people, we gotta use code to actually, compel people to actually take action, and, unless they're willing to do it beforehand, and beforehand is always best. So those are the things that exist and those things that control. The next thing that's sort of the state of it. There's a big disconnect between, how do I say this? The stuff that you're doing and the stuff that insurance cares about or can know and factor into their risk models. Got my mouse. So there's I guess one way to say it, I'm not sure how, tech conversing you are, but there's a lack of resolution in insurance decision making. They can't factor, because of the forces they're dealing with and sort of their models, what you have done to enclose your eaves or clean your gutters or take out that juniper or whatever it is, versus what the large scale models they have to determine whether insurance is even worth writing in the Rouge area. So the goal, in order to connect parcel and neighborhood level mitigations, is through kind of a data sharing. And I'm sure Ryan may talk a little bit more about this, but it's like they need to increase the resolution so that the price you pay is less reflective of the general risk, especially if you live on a mitigated property and you've done everything you can. And once we can start connecting those layers of risk, of the factors that are on your property that influence those decisions, to incentives, well, then we'll have a really, really busy table over here. Because all of what we do, the things that we do, free home risk assessments, we do home hardening incentives, we do firewalls, we do the zone-based mitigations. And if we are able to say, hey, we can give you a 25 to 35% premium reduction, then I imagine you're going to want to come talk to us, right? We're not there yet in Oregon, but we're hoping to get there, and in the next couple of years, I think we'll be able to get there. I didn't do anything again. I'm going to click.
Yeah.
So there's something out there. The WUI Data Commons is one sort of solution for it, right? Where you have property inspectors or home assessors, you have homeowners themselves, you have mitigation consultants, you have community planners, and you've got fire scientists, all deciding and providing and creating data for smaller communities. So it would include partial inspection data, right? The building features, the attributes, whether there's defensible space. And then you have that intra-community data, the fuel breaks that exist, sort of the controllable and the existing conditions, all quantified in a way that makes sense to insurers, right? And then it turns into anonymized data. It's not your name and your property, your parcel number, because insurers are asking for that now. But if they could use your neighbors as the 100 people around you, the 100 properties around you to understand what sort of conditions exist, then they're able to make much more granular, more fact-based decisions on how much your premium should cost and whether it could be continued. So again, that data would be sort of shared with insurers, reinsurers, catastrophe modelers, fire scientists, all these folks who are kind of the decision makers in this space. It works now. So the real important part is to make mitigations that matter. Your landscape conditions, the conditions in your forest do matter. They are going to matter when it comes to what sort of severity of wildfire is going to happen in the Rogue Valley or the Applegate Valley. But at the same time, they're not underwriting the price of the forest, they're underwriting the price of your house, right? So the closer you get to your home and when determining whether that burns down, the more that mitigation matters as far as to the insurer, as far as loss goes. They need data that drives availability for insurance. None of these people want to get out of the market. They don't want, we have 150, 160, where's Matt Ramage there? How many do we have?
In property?
Insured carriers in Oregon.
Yeah, about 103 right now.
Whoa.
Yeah.
Wow, we lost like 50 in the last time.
Yeah,
we lost
the
every time.
last
So we're
two
seeing this,
Yeah.
right?
Last two that dropped out were Sublimity United Heritage, and now Safeco is collapsing under Liberty Mutual.
Okay, fun stuff. So last time we talked, yeah, and you should go, if you want to learn more about this, go talk to Matt from DFR, here, because I'm lucky enough to get to work with that office on the Insurance Advisory Committee for the state, and I learned more than I maybe want to know, but I'll tell you, that's a big drop. That's a big drop in insurers. So I usually say we have 150 insurers doing business in a fairly healthy market in Oregon, but to hear it has dropped to 103, that's important. But they don't want to get out of these markets. They want to underwrite risk. Wildfire is a risk that they want to have in their portfolio, but they're being compelled to get out. And that will then drive more Oregonians onto the FAIR plan, right? The insurer of last resort. And we've seen large numbers of Californians get pushed onto the FAIR plan because there's simply no other choice. And I'll tell you now, Oregon, we can't afford that. We can't afford a large number of Oregonians going onto a state-funded plan that then they carry the risk for all Oregonians. So it really is about us doing our part, but also finding solutions as quickly as possible. And again, it takes critical mass. We have to do this not just in one house, not just in one neighborhood, but in a lot of different places at once. So again, the objectives we're trying to address: close the gap between mitigation actions and what's visible to insurers and modelers, drive down the cost of collecting granular, valid, and comprehensive data. We're a nonprofit. We don't share your data with insurers, but we certainly would like to increase resolution for them for the Applegate. So there may come a point where we're like, yes, we have done 1,000 home assessments in the Applegate. Here's general risk data. Again, no personal information on that, but it allows them to make better decisions on underwriting that risk. And we do it with public funds. We do it with grants, right? So it doesn't really cost them anything, unless they want to support a small grassroots nonprofit. Identify and overcome barriers to mitigation. Why don't people take action, right? We're understanding that. And that's the other part of the work I do, is really understanding sort of the community pathways for taking action. Like, why don't people do them? And if we know why, then we'll be able to design an incentive program or a messaging or have the neighbor deliver it, someone you trust, to get you to take action. Facilitate impactful and effective community action, same thing. Bring consistency to requirements and messaging around mitigations that matter. You're going to interface with a lot of different folks here, and we all have our own precious individual brochures. but they all really say the same thing. And so when you're gathering up information here, gather as much as possible, read through it, and you'll realize we're all really saying the same thing. You own this risk, and it's your responsibility to take action on that. Deepen understanding of fire science. The fire science is moving fast. There's a lot of it out there. I'm kind of at the point where we don't need a whole lot more data to prove these things, but it's also slow to be adopted, especially around the fire science around why communities losses happen and how they happen and why they happen. So refine and support risk model validity and insurance pricing, facilitate targeted prioritization of mitigations to better allocate scarce resources. There's not enough suppression capacity out there to stop homes burning down in wind-driven fires. We saw that, we see it over and over again. But also, there's not enough public funding to treat every acre of the Applegate. So how do we prioritize those things? That's the stuff that's working on in the CWPP and SOFRIC and Vibrant Planet. All these folks, they're trying to do prioritizations of fuels treatments, and we're in the same way thinking about prioritizations of where do we harden homes first, right? If we're working in a really dense community, like a manufactured home, it's really hard to mitigate that kind of housing density, but we may be more likely to do home hardening incentives on the exterior, the margins of that community to work on preventing fire from entering it. So we also have to do some prioritization there. Not every home, if you live in a town like Ashland or Medford, not every home in the middle has to be mitigated the same as the homes that are in the WUI or on the outskirts of the community. So understanding that science is really important. And then reducing the risk to lives and property, right? That's kind of why we do this work. So again, I don't have to do this, but the plan is better science, reliable standards, new partnerships, and we're seeing that happen in our world, certainly in my world. There are a few things that are coming down the pipeline for Oregon. Right now, I just asked the fire marshal how many wildfire prepared homes do we have in Oregon. We have one, right? But I think I was talking to IBHS yesterday, and they have 3,500 or, I have a horrible number, 3,500 or like double that, 7,000 homes in the pipeline. And that's mostly California. They're getting there. And it's not unobtainable to become a wildfire prepared home. At the base level, there's two standards. There's Wildfire Prepared Home Plus. That's a little bit harder without new construction. And then there's Wildfire Prepared Neighborhoods. And they've pretty much kind of given up the ghost on whether existing neighborhoods are ever gonna meet that standard, but it's something for developers, for new development, might meet that standard for Wildfire Prepared Home Neighborhoods. And those are can be tied directly to premium reductions. One thing that's really needed, and I know I'm just fire hosing you guys right now, one thing that's really needed is we need some insurers to actually be the tipping point. We need some of the big, like 3 to 10, to make some decisions that they're gonna recognize parcel level mitigations or neighborhood level mitigations so that the smaller carriers out there can kind of follow suit. They say what's needed is more outreach and collaboration among firefighting agencies, insurers, community organizations, builders, lenders, and realtors. This is why we do this. This is why you guys can. This is building community, and it's really important that we just keep doing this because we're gonna get to answers that actually matter to your pocketbook. This is the wildfire prepared home. We probably have information, maybe even OSFM. Do you guys carry IBHS information over there?
We do.
Yay! Go talk to Teresa. But it's not that hard, and it's pretty. For the base level, it's not too hard. So kind of back to this. Right? Hopefully I've helped make sense of this a bit more. There's mega wildfires and community losses. Those are on the rise, right? More destructive fires, faster fires, higher payouts. The global reinsurance pressure is pushing to reduce the amount of risk that carriers that rely on their funding to pay out are riding in catastrophe-prone areas, not just wildfire. We have limited wildfire risk models, right? We can't always agree on a data standard for what mitigations matter, but we're getting close. The resolution's low, and there's high uncertainty and confidence. And then limited mitigation solutions. So there's only partial adoptions of things like FireWatch, which is actually a low barrier entry-level program, but it's the best community organizing template I've ever seen. So while getting your signs, you don't have to do a whole hell of a lot every year. The fact that neighbors are talking to neighbors and trying to work together and use resources together and uptake resources together, that actually matters a whole lot. And then wildfire prepared homes. We'll see more homes come in, but the more we can get, the more mitigations that can happen, and they can happen at a scale that matters, and we can promote that, the more we're likely to see change in the insurance market. But until then, You guys and me, we're all the shock absorbers for climate change, and that's taking us to shape of insurance. So, do I have time for? I have like a little bit of time for
Yeah,
questions.
I think
Man,
that's
I was fast. Wow. I'd love to take some questions if you got them. Rich, you look like you're about to raise your hand.
Yeah, it seems obvious when you read the Insurance Institute for Business and Home Safety and the work that Steve Quarles has been doing now for 20-something years, ever since he was at Berkeley, that home flammability is a function of building codes. And that's it. That's the beginning and the end of it. And when you see
When it's built, but then you never know what's going to kind of grow up around or lack
right.
maintenance over the course of years. Because you know, I don't want to interrupt you here. I want you to finish, but we do have older homes in the Rogue Valley, right? And they were built at a different age.
Yes, and the newer homes that will be built next to them are going to be at the outer edges, right next to the brush and the trees, generally, wouldn't you say?
Yeah, and I'd say one.
So therefore,
Yeah.
building codes really, really matter. And if you have, for example, oriented strand board sheathing going on roofs as towns being rebuilt, and you know that the burn-through time for plywood is like double that for oriented strand board, you ask yourself, why the hell are they building it with oriented strand board? The answer is the building code allows them to. Why do we have a building code that's more 19th century than 21st century in terms of fire science and all this wonderful stuff that Quarles and all these other researchers have been developing? Okay, and I would argue the answer is our county commissioners, literally the elephant in the room, because they're all Republicans, are not doing their job. And until we, in some way, put pressure on them to modernize building codes and, God help us, zoning, that's going to be a hot potato. We're still going to have, every few years, these terrible results. With the houses being burned and in some cases people.
Yeah.
So I'm just going to throw that out to you.
It's way to launch a hot potato gun at it, man. There's a few levels here. One is, just to give you a kind of anecdotal story, Talent updated its codes in the wake of the Alameda fire, but when the first homes were coming back, metal roofs weren't allowed, and vegetation was required within the first 0 to 5 feet. We have to update codes. That's the anecdotal things, but they've done a great job, and now and we're about to see we have 2 to 3 communities now voting to adopt the new WUI code that's been provided by the Oregon State Fire Marshal. We would have had a state code standard in the WUI, but we lobbied against the map. The map was our one pathway to get that state code passed, and the misinformation campaigns that were thrown at all of us and all of you, and
There's that elephant again.
and put, I don't have to say the map, you made me say it, that it was going to raise our insurance premiums. The insurance premiums was going to raise no matter what. The insurers care very little about our low resolution flame height map. It was the lowest common denominator, lowest ability as a map function to allow a state WUI code to come in, and we torched it. And for better or for worse, that was our pathway. But I'll also say this, is that you're right that new homes are sprouting up in the WUI on the margins of where the fuels meet the community. But insurance prices have already becoming a disincentive for people to build in the WUI. And also, there's this simple matter that I'll touch things now, or blue screen, that, I love where I live. I love where my mom and dad came up from 73 from Texas via the Bay Area until they could afford land and bought their home for $15,000 without a foundation of 15 acres, and now it's 100. I love this. It's part of who I am. But there's the question, should we be putting people in such wildfire-prone areas? Should we be building and developing there?
You mean like town?
Well, I mean like the Applegate. right? I mean,
I'm sorry, Talent's more flammable than the applicant,
Yeah,
I can prove it.
yeah, well,
Talent burned,
Talon was
yeah,
number
okay,
11
has-
on most
has-
likely
yeah.
to burn, yeah, in 2019, right? We knew this before it happened. You're right, but I would say, like, what I'm saying is going to be a disincentive for communities like this to grow, to build infrastructure, to build walkability. I mean, not that, we're ever going to get to walkability applicant. I don't think we necessarily should, but at the same time, there's going to be a disincentive for people to move out into the woods at the same level they have previously,
Yeah.
and that then will curtail community growth, community development, and it'll also make those of us who live in these places pay more to do so, and that's a disincentive for some people to
And all I'm saying, Tucker, is please, when you talk about this stuff, talk about building codes.
Yeah.
Because they're why these houses are burning.
There's a number of tools in the tool belt, but building codes are, they land different in community, but I absolutely believe we need to use every lever, not just building codes.
Thank you.
We need to have Zillow bring back the wildfire risk rating 3-month experiment it did, so that we know on property transfer, or when you're refinancing your mortgage and you have money kind of floating around where these decision points can happen to make mitigations that matter, that you actually do them. We need every lever out there to not just ask people to do it, but to compel them to. Marta, hi.
Hello. So I've been working in the economic fire recovery space since 2018, starting with Chamco. And maybe it's because I need a slimmer or a sliver of hope in my life. Would you say as Oregon communities, West Coast communities, we are learning, and are you seeing positive community knowledge being shared and built and implemented?
Hell yes. And I think that really starts in places like this. And I think Applegate and in places like this where there's a tight-knit community and where there's like a lot of trust within neighborhoods, and and some clinkers there too, but also like people know each other and work together. I think that's kind of a key Oregonian sort of identifier, right? We were really fast post-fire Alameda to set up mutual aid stations. And these weren't agencies doing, these were residents, I took part in these things. I think as Oregonians, we're very, 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 we work together really well across lines, especially when we need to. I have neighbors, we don't agree politically, but we both taken advantage of the same grants. We both share heavy machinery that we own that we can cut fire line if we need to. And I think that's a really positive thing to be an Oregonian, that we can create scalable action. It's why a lot of California folks who've been working in this space are ditching California and moving up here because they know we get it done. They think of Oregon as a future place where we can create solutions that may not be possible with so much regulation to our neighbors to the south.
Thank you.
What else?
Yeah.
Oh yeah.
I might have missed this early on, apologies if I did. So in regards to getting better resolution with our fire maps, is there a mechanism that the insurance companies would allow for individuals to become, for lack of a better word, certified to assess homes to create better resolution for those fire maps to be able to reduce, let's say, the premiums for neighborhoods, communities, and things like that?
And what are you doing March 20th and 21st?
21st and then more.
That we're using this room to train 40 people to assess homes that we can then, primarily the job is to tell homeowners what they can do,
Well, yeah.
right? But at some point, if we can create a statistically significant and a usable data set that insurers can, that's exactly what we do the whole program is like to educate residents. And we're training, Rich went through this. We have a number of people in this room who are probably going through training.
Really good. Cool.
It's 2-day training, and we'll get you out in the field assessing homes and bringing home hardening incentives to your neighbors.
Thank you.
To that point, Senate Bill 85, which passed last year, is a pretty important piece of legislation, and it's what combines the efforts of 3 main state agencies: DCBS, which is the Department of Consumer and Business Services, Oregon State Fire Marshal, Department of Forestry, and then they corral the insurance industry to come together and say, okay, what can be agreed upon as a wildfire adaptive community standards?
Awesome.
Which, what does that mean? That means, okay, insurance industry, how can we address the 2 main issues and insurance problems in the state? Accessibility, as Tucker talked about, and affordability. It doesn't matter if it costs a kidney to get your insurance policy if you can't get it. So you gotta get past that first issue. And so the intent is to come to legislation with a recommendation of, here's what a standard would look like for certification. Other states have it, California has it, you can get certified. You can get an IBHS certification in Oregon, you can pay for it, but your insurance company's gonna go, that's funny. They're not gonna do anything with it. They're not gonna recognize it yet. So what's important is to get an agreement on what would allow insurance companies to say, yes, I'll issue a policy. Might it still be expensive? Sure. Depends on where you're at. But I think it's an important step. And then the other things that come along is the defensible space and the home hardening, which I wholeheartedly agree because, oh my gosh, we threw those out, but I'm not supposed to have an opinion. So,
Well, and just to say the other part of Senate Bill 85 is what it also unlocks is blue sky or continuous funding for wildfire mitigation, right? So you have $43 million being the programs that I'm also working with the state fire marshal on developing these programs, but like how do you lay out $43 million every 2 years that includes home hardening grants? We're gonna see grants to homeowners here for home hardening larger than what we as a nonprofit can provide, certainly at a state level. So the same sorts of fuels reduction programs that you're enjoying right now in the Applegate at a very healthy level, the same sorts of programs that are developed to increase prescribed fire on the landscape, we're going to see them in the next couple of years where those also apply for your home, right? To enclose your eaves as well. I don't know what exactly they're going to do. They're working it out right now. But what we do is we replace your bark mulch and we put on ember-resistant vent screens, really low-hanging, sort of the cheap fruit to get you guys started on sort of the home hardening journey. A lot of people have this misconception that home hardening has to be this wildly expensive roof replacement. If you have a composite roof, tile, or a metal roof, or almost every roof we have nowadays other than shake shingle is a type A roof. It more or less performs the same under wildfire. But we're going to start seeing these same sorts of public investments, not just in the landscape, but also around homes. And that's a really important thing to think about. And ODF will have another $21 million, I think, to lay out for more fuels reduction. So what the legislature did pass is not just partnerships and agreements and sort of pathways, but also the funding to do it. And that's actually really, really huge. And so we're going to see some great programs roll out in the next probably year here in Oregon.
Doug, were you gonna? No. Okay. That's time.
That's time.
Yep.
Thank you, Tucker. A really good conversation. I do want to highlight, as Tucker did, that he'll be here at the Firebrand Resiliency Collective along with Katie. That table to talk more about this, as well as Matt from the Division of Financial Regulation. We're also going to have Ryan Valdez from Rock Rose Insurance come up here and talk a little bit more about insurance at our next session starting at 1. So in the meantime, I suggest you go out, enjoy the sun, but also talk to more people and maybe get some food. Thanks, everyone.
It's my last event as a board member.
Touching the mouth really helps.
one thing is that we have to